Everybody, welcome to problem 24-2. But before we get there, let's go ahead and show that title card. Okay, 24-2, here we go. So this is a video solution walkthrough from Intermediate Accounting, 17th edition. Textbook authors are Don Kiso, Jerry Weingant, and Terry Warfield. The question used in this presentation is copyright 2019 by John Wiley & Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley, and the solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky, not the authors of the textbook or of Wiley. So what I'm going to do before we get started is that I went to just to kind of like better myself, and I didn't really give Wiley a fair shot on this, but I like the way that Becker CPA review goes through and shows this information. And so when you're looking at segment reporting and the thing that the way Becker works is that you look at each individual part of the CPA exam, but right over here you see something specifically for segment reporting. And so I'm just going to kind of use this as a little quick preview here of Becker CPA review. This is all owned by Becker. This is not owned by me. So let's just kind of go through and take a look at this. One of the things is intercompany trend when you're doing segment reporting. And remember, I've kind of talked about this previously, is that you want to kind of see where risks are with the particular companies. And, when we're doing segment reporting, the key thing that kind of threw me off was that basically intercompany transactions are not eliminated for purposes of segment reporting. So in the example we'll see in a moment, you'll see that there are some intersegmental revenues that we will include. So over here, just like when you're looking at reportable segments and the quantitative threshold, and this is what we've been looking at, there's a 10% size test. So there's revenue, which includes both sales to external customers and intersegment sales, but it does not include this stuff, and then reported profit or loss. And the key is the absolute amount of the segment's reported or loss is 10% or more of the combined reported profit of all segments that did not report a loss, the combined reported loss of all operating segments that did not report a loss. And then lastly, for assets, it's 10% or more of the combined assets. So let's go ahead and look through. And again, there's a lot of other disclosures over here that they kind of go into when it comes to segment reporting. But for the question that we're going to be answering today, which is problem 24-2, what I've just gone over should give us enough. So let's go ahead and take a look at first at sales revenue. So we've got departments A, B, C, D, and E. Okay, so we've got over here sales revenue. And we want to remember that we're going to be going through and including even though that these had intersegment sales in B and C, we're going to include those in our test. So our total revenues over here are going to be 785,000. So the key over here, the threshold for the revenue test is basically going to be 78,500. So which ones fall into that category? Well, per the revenue test, only C meets the threshold, right? Why does C meet the threshold? 580 is greater than 78,500. All of this here, this is 40,000 is below 78.5. 75 is below 78.5. 35,000 is below 78.5. And then over here, 55 is below 78.5. So the only segment that we would include under the revenue test would basically be Department C. Now let's go overhead and take a look at our next one, our operating profit or loss test. Now, when I do this, I'm not going to include the $15,000 loss. So this will be just, I'll show this as a 0 for right now. So my total revenues are going to be 97,000. When I take 10% of that amount, my segment over here, the reportable segment, ends up being anything that is greater than 9,700. So for these two parts over here, parts D, so 4,000 is less than 9,9700. 7 is less than 9,700. However, for part B, what we have to do is we're looking at this on an absolute value basis. So because 15 on an absolute value is greater than 9.7, segment B, by virtue of this alone, becomes a reportable segment. So let's go ahead down over here and let's look at our identifiable assets. So for our identifiable assets for A, B, C, D, and E, we've got 35,000, we have got 80,000, we have 500,000, we have 65,000, and then we have 50,000. So as we look at this over here, we've got a total over here of 730,000. So as I look at this over here for the identifiable assets, 10% of 730 is going to be 73,000. So the only two departments that meet the identifiable assets test are going to be Department B as well as Department C. So this 35 is below 73,000. The 65 is below 73,000, and then the 50,000 is below 73,000. So based on these tests, if we were to go through and prepare the disclosures, which we will do momentarily, we are only going to be going through and including departments A, B, and C as separate items. We'll classify the rest, or departments D and E, as other, because they have not met any of the thresholds. So let's now go through over here and start working up on our disclosure. So for our sales revenue, we're going to show this as external and internal. And this will be giving us our total revenue. In terms of the segments that we're going to be showing, we're going to be showing segments A, B, and C, and then we're going to show other, and then we'll have a total. So over here, when it comes to external sales for A, all 40,000 was related to external sales. But over here for Department B, is this Department B included 20,000 of external sales or inter-segment sales. So this is going to be 20,000. And this is going to be 55,000. Where did I get the 55,000 from? 75,000 minus 20,000 internal is going to equal to the 55,000. Okay. For Department C, my total revenues over here, my external is going to be 480. My external revenues are going to be 100,000. So my total sales for Department C are going to be at 580. For the other departments, my external revenue is going to be 35,000 plus 55,000 or 90,000. So my total other revenue is going to be at 90,000. So here I've got a total of 785,000. Okay. So now I'm going to go next to my cost of goods sold. my cost of goods sold, and then we can also just do operating expenses at the same time to get to our total expenses. So our cost of goods sold for A is 19,000. Our operating expenses were 10,000 for total expenses of 29. For department B, I've got 50, 40, total of 90. For department C, I have 270,000, 235,000 for a total of 505. For the other two departments, this is going to be 19,000 plus 30,000. This is going to be 12,000 plus 18,000, or a total of 30,000. This will give me a total of 79,000. So over here, my total expenses, I'm going to have my operating profit loss right over here. So this will be a total of 40,000 minus the expenses. This over here will be a negative 15. This will be 75, and this will be 11,000. This is totaling over here. For a total of 82. The last thing I'm going to go through and do is I'm going to list out identifiable assets. My identifiable assets are 35,000, 80,000, 500,000, 60, and then over here, this is going to be 65,000 plus 50,000. So over here, my identifiable assets are going to be 730,000. Okay. So over here, they're also showing there's also basically a reconciliation of revenues. Okay, so the next one they're wanting us to show is, and again, if I was giving this exam, right, what I'm going to really test you on is this part over here, not necessarily as much as the disclosures, but over here, the reconciliation of revenues. So I have total segment revenues less revenues in material less intersegmental. So my total revenues of everything is at 785. My immaterial revenues are 90. My intersegment revenues are 120. So the total revenues from reportable segments is at 575. The reconciliation of profit or loss total segment operating profit is going to be at 82, less profits of immaterial segments. And this essentially here would be the 11,000 from departments D and E. This is going to give me profits from reportable segments. And then reconciliation of assets, total segment assets, less immaterial segments, assets from reportable segments. So segment assets are 730. The ones from the immaterial segments are 115. So my assets from my reportable segments are going to be at 615. Okay, so that brings us over here to the conclusion of exercise. This will be a problem 24-2. So just it's kind of an expansion on exercise 24-3. except a little bit more challenging when it comes to actually going through and doing the disclosures. So I want to thank you for being with me here today. And I also want to thank Wiley once again for allowing me to use their videos or use their questions and make videos from them. So please don't forget to like and subscribe. And if you have wanting to see any other solutions, please feel free to ask for them in the comments. Have a great day.